and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number 800-951-0592, the website at allamericangold.com, and welcome to Monday. You know, wow, what a crazy week last week was. The big announcement from the Fed saying that, hey, we're going to slow the pace of rate hikes, but the rates are going to have to go higher for longer. And then, of course, tomorrow, the election, and we'll see how that plays out. And just a warning. I think the Republicans are going to get control of the House and the Senate. It really isn't going to change anything because, the president is still in charge for the next couple of years. But, again, anything that counts towards positivity, I'm about. Speaking of positivity, listen, get ready. Make sure you're set up for what is coming, 2023. The layoffs have started. You know, last week we had Twitter and we had Snap, we had Open Door, we had Wells Fargo. Today, I guess Wednesday or Thursday, we're waiting for Meta Facebook. These could be layoffs in the 10,000 plus range. And again, I think everybody's ready for a much slower 2023, even though rates are rising. We've got my son Joey with us. He's your financial expert. He's the guy that you go to that, hey, you know what, I've got my gold, I've got my silver, I'm putting those things away. What do I do with the rest of those funds? That's where Joey comes in. And Joey, I'm sure you guys at Northwestern Mutual are doing the same thing, preparing for rates to be higher for longer and watching what's going to happen with the election.
No, that's exactly what we're doing. We're just making sure we're setting up some defense right now. You know, the smoke and mirrors are always happening come election season. So how do we make sure we're set up, you know, for this high interest rate market, making sure that we're not losing out on all these opportunities that are going to be presenting themselves, right? And really what that stems from is just your current situation where you're at. You know, no 1-2 plans or asset allocations of the investment vehicles are the same. And it all really depends on your time horizon, how risky you want to be, how conservative do you want to be, and then overall, what is the goal for your money, right? If you're a guy that wants to get those 15% gains, well, then we're going to be aggressive. But if you're someone that's like, hey, Joey, I want to preserve my wealth, I want you guys to grow it slowly and make sure that I'm not riding this roller coaster, well, we can certainly help you out with that. There's a lot of things we're helping out our clients right now, and I know all the big guys in here, and myself included, we're reaching out to all of our clients. We're making sure, hey, we're still set up and everything is going as planned. Because if we're not setting ourselves up and we're not talking about this and having these conversations before big events, you know, like this upcoming election, you know, there's a good chance that you're going to see some of your money go away when you don't know how it's working for you.
Yeah, and again, I think what I heard there, there's opportunity here. If you're set up right, you're set up wrong, you're going to get slaughtered out there, and that's really the problem. And people that, if they have a financial advisor, they haven't been hearing from them, or they're not reaching out to them, you got the wrong guy. Because let's face it, having yourself set up properly before it happens is the only way to make opportunities happen.
No, you're exactly right. If we put our foot in the back burner and we say, oh, let's put it off till next year, let's wait till after the holidays, or let's wait till after the election, well, then you're really just shooting yourself in the foot. Now is the time to take that action and start making some changes with your plan. If your advisor doesn't reach out to you at least twice, 3-4 times a year, I'd highly recommend talking to someone else and having that conversation with my team and I. We're constantly outreaching to our clients.
Listen, we know you're in Chicago, but what about people? Hey, wait a minute, I'm in Arizona or I'm in Colorado, whatever state they're listening from, and they want to do some business face to face. You guys can still do that for them.
We can certainly do that. You know, I have access to all the network offices across the country, and I'm in touch with some guys in Colorado and some guys in Arizona. And you said, hey, Joe, I don't feel comfortable doing this online Zoom stuff. well, then I can certainly set you up with one of my mentors out near you, right? And we can have that face-to-face interaction. You can talk to that advisor face-to-face and really make that personal connection, right? But in order to do that, you got to reach out and you got to take some action right now. It's super easy to say, I'm going to do this tomorrow or next week or after the holidays. Now is the time, and I'm urging people, we need to start taking action, or we're going to fall behind the 8 ball here, and we're going to lose all of our money in our 401ks, right? We're going to lose all the money that we have in the market because we're not properly allocated, and we're not taking advantage of the current situation that we're in, right? Interest rates are going to raise. What do we do? Well, we have some thoughts and ideas around that, and I just urge people, now is the time to make that phone call. We can set something up, whether it be over the phone, over the Zoom. If you're in Arizona or Colorado, I have connections to some senior mentor advisors down there that I can certainly help you, make that introduction for so you can meet with them face to face.
Joey, give out your contact information here. We're coming up on this first break.
Yeah, reach me at my personal cell, 602-909-9048. Again, that's 602-909-9048. Shoot me a call, shoot me a text. If I don't answer right away, it's because I'm probably talking with someone else, and I'll get back to you as soon as possible. And we'll carve out 45 minutes for us to chat and get the ball rolling here, because that's what we need to be doing. We got to take some action.
We're going to be right back. Don't touch that dial. Patriot Radio News Hour on this Monday. 800-951-0592, Patriot Radio News Hour. Joe and Jason, we got my son Joey with us from Northwestern Mutual. Joey, I got 2 questions I want you to take a few minutes to answer. Number one, you guys are so much more than hey, they sell life insurance. I know a lot of people, when they hear Northwestern Mutual, that's what they think. That's a part of what you do, but you guys do a lot more than just that. And then the second thing I want you to answer is, you've been coming on now for a while. I mean, you've been coming on the air for well over a year now. And I've noticed, especially the last couple of times you've come on, looks like there's something changing where Northwestern Mutual thinks that there's going to be a big shift in the market coming soon. And now all of a sudden you've gone from, hey, let's start the conversation to, hey, what? Conversation time's over. You got to hurry up and get this done.
Yeah, those are some 2 great questions. And just to answer the first one, we are way more than a life insurance company. Yes, that's something we do and we are the top insurance provider. We give out the best dividends regarding the life insurance and things like that, but we do so much more. We do small business planning. How do we set up benefits for our companies? How do we be more tax efficient? We set up great ways for tax planning for small business owners. Then on the personal side of things, for your personal financial planning, we develop retirement analysis that show how we're tracking for certain goals. We help people plan for estate planning. And then we also help people for their legal planning, wills, trusts, etc. I mean, we're almost basically people's financial quarterback. We pretty much do everything, and we do more than things like Merrill Lynch or Morgan Stanley or J.P. Morgan, and they're more concerned about only talking to people with tens of millions of dollars in investments, whereas we're talking to everyone, right? We talk to people with the tens of millions of dollars. We talk to people with the hundreds of thousands of dollars. We talk to everybody, and what we do for them and our value that we bring is we don't charge a penny for our time. We find that if we come together and we provide value and establish a relationship with trust, then our clients are going to stay with us year over year. We average a 27-year relationship with all of our clients, whereas the industry average is 2.5 years. And the reason why we average so long with our clients is because we do right by them. We're not charging for our time. And then we're showing them ideas and things around planning that are going to set them up for the future. And I will recommend things to people and have them do things and set them up with certain, investment vehicles that I don't even get paid on, but I know it's in my client's best interest, so I do it anyways. Because we know if we put in that work and effort and time for people we're sitting down in front of, they're going to be clients for a lifetime with us. And the whole thing about it is, how do we provide value today? And then how do we get our clients to take action? Because when clients don't take action, that's just as good as not even having a conversation with our team. We need people to move forward with things, because if they don't, they're going to be way behind the eight ball, which brings me to your second question. Why are we urgently having people take action now? Well, because you know what? If we don't take action today, you're not going to take action tomorrow. The market is set up in a weird way. We're about to finish this election cycle. Things are going to be happening. There's going to be a shift in the market. And so we're urging all of our prospective clients and our current clients, now is the time to start setting things up. If we wait till the end of the year to do these things, we're going to miss out on a whole lot of opportunities, right? So how do we come in and how do we create urgency for people? Because, you may not know it, you don't pay attention to it every day, but this is what I do every day for 12 hours a day. And we need to proceed with something. We need to get a game plan together, and we need to act on this game plan. The market has been absolutely wild these past 2 years, right? And now I think there's going to be a chance for us to reap some rewards, and we got to make sure we are allocated in the correct way to achieve these, right? If we just sit here and we let our money invest in a 401k through a company, or with old 401ks with previous employers, and we're not looking at it at all, there's a huge problem there. Because the fact of the matter is, you're probably allocated differently 5 years ago than we would recommend today. So how do we get our clients to come in and take action? And the reason they do take action is because they trust us and because we know what we're doing. We've been around here 170 years. We're the highest rated financial company in the nation, and we average that 27-year relationship with our clients. We are a great, reputable company, and really what we're just trying to do is set our clients up for the future, knowing that if we do the good work for them, you'll stay with us for your lifetime. And then also you don't have to make all these different phone calls to different advisors that don't reach out to you. We're going to be the ones calling you. I make a point to call all of my clients at least 4 times a year, once a quarter, just to check in with them, show them how the plan is working, show them where we're at and where we expect to be. And we're going to be 100% transparent the whole way. But now is the time to take action. We need to get things done.
Yeah, and it looks that way exactly, because I get it too, because I'm that way too. I'm like, oh, well, Thanksgiving's coming, and then Christmas and New Year's. You know what? I'll just deal with it after that. And it sounds like what you're saying is the market will have already moved before that happens.
Yeah, it's going to move before then. And a lot of clients, or people are saying, oh, let's chat after Christmas. Let's chat after Thanksgiving. Well, here's the thing. We need to see how your taxes are lining up for the end of the year. And then we also need a game plan to attack this new beast at the beginning of the year. We need to chat today so we can set ourselves up for the future and during the election, and also take advantage of what is going to happen in the market. And it's going to happen soon. It's going to move soon. So how do we set ourselves up to reap the rewards in the best way possible? And
this
really
isn't gold, right? They can call me. You guys call me today, right? I'll have the gold in your hand before the end of the week. That's not how it works here, and we know that when you're dealing with the financial stuff, old 401ks, current 401ks, IRAs, and all these other investment-type vehicles, it's going to take a little bit. If you reach out to Joey today, hey, the goal is, hey, let's have something done before Christmas rolls around.
Yeah, it takes time. There's paperwork that needs to be filled out. We're going to have to call your previous employers or your IRAs, get them rolled over, fill out some paperwork, have you sign some documents on the investment side of things. And then for the insurance side of things, it takes time. You got to go through underwriting. We got to set up these different buckets of money along with all the fun stuff going on in the market, and we're just making sure we're diversifying everybody's portfolio. But the biggest thing that I want to tell people right now is the biggest expense you'll ever have is taxes. There are no other advisors out there that are going to help you with the tax planning the way we are. We are going to show you interesting and elaborate ways to shelter this money so that we're giving Uncle Sam the smallest slice of the pie while also growing our money in the market. And there's multiple ways we do that. The backdoor Roth IRAs. We do really cool insurance planning to shelter money, then also get money growing tax-free and without risk to the market. There's a lot of things we do, and it really just depends overall what is your situation, but I am urging you, make that phone call. Let's have this conversation, but let's take some action at the end of the day. We need to get
you
stuff
brought
done.
up a couple of quick things, Joey, really quick. Before I forget them, I want to jump in here because you brought up a couple of really important things that isn't in the market, right? Keeping that money safe. If you got money, like I always talk about, sitting in those bank accounts, we know that digital currency is coming. We know they're going to be trying to get their hands on it, and if they don't do it through the digital currency, they're going to do it through the taxes. It's never been more important to really take a really hard look at how you're set up tax-wise right now.
It's super important. We're in an actually historically low tax bracket right now, and it's going to shoot up. The amount of debt we're taking on year over year, they need to find a way to pay for it, and quite frankly, that's going to be all of us. We're the ones that are going to have to bite that bullet and pay for it. But if you want someone to show you how the rich are tax sheltering their gains and their wins, we will show you how to do that. It is not just for the rich. Everyone can do these really cool, interesting, elaborate ways to shelter their money tax-wise. Also, to your point, you have a lot of money in the bank. You don't like the market. You don't like how crazy it can be. You don't want to roll the roller coaster. Well, we can show you annuities, and that essentially helps you create your own pension, your own stream of income monthly for the rest of your life. And there's so many things we can do to help people out. You have a lot of abundant cash. What should I do with it? I'm losing 10% to inflation. How do I get that money to work for me? Well, we have a lot of ideas. And the thing is,
really quickly before we let you go, Joey. Yeah, really quickly before we let you go, because you talked about annuities. One of the things that makes you guys different is you guys are a fiduciary. You don't have we just sell these annuities that we have that we make a bunch of commissions on. That's not how you guys do things.
No, that's not how we do things at all. We don't have any quotas to push our own stuff. We're a mutually held company. We're not publicly traded. We're not being forced to push our own funds or anything like that. What we're trying to do here is we're just trying to show you what's the best thing to do if we were in your shoes, right? The annuities are a great term of investment in terms of it's not tied to the market and you create your own pension over the rest of your life. And it could be the right thing for you, but it all depends on your age and where you're at, right? Or how much money you have in the bank or things like that. But we are not pushing our own stuff in terms of the market. We have
Joey, really quickly, I know we got to get going here. Give out that contact information one last time.
Yes, reach me at my personal cell, which is 602-909-9048. Again, 602-909-9048. I look forward to chatting with you guys and taking some action.
Thank you, Joey. Have a great day. We'll have Joey back next week. And don't forget, if you didn't get the number, don't worry. Go to 1360khnc.com, and you can find his contact information there. You can call us here at Patriot. We have it. Jason has it. I have it. Brian has it. Pretty much everybody has it, and we'll get that to you. But Jason, when we get back, I think we've got to talk about gold and silver. Once again, moving higher again today. Gold's up 16.83. Silver's right at $21, kind of building and solidifying on the gains that we saw Friday, and now starting to take out some of these technical numbers that could set it up for even higher prices than maybe a little sooner than we thought.
Yeah, Friday was quite a day for gold and silver, and gold's up a little bit today, and of course the next couple of days there'll be a lot of stuff coming out the next few days. You get that CPI coming out, and the election will be over with.
That's Thursday. Yeah, that's a great point. We got the election tomorrow. CPI is coming. I'll check. It's either Wednesday or Thursday. I'll get on the other side of the break. I'll get that number, but I don't see CPI doing much. Do you? I think it's still going to be as high as it's been, right? It's still in those low eights.
And I've been watching, Joe, because it's year over year. So October was one of the months last year in 2021 when it really took a big jump. The inflation did. So it's very, very possible that these numbers start to come down a little bit, not because inflation's coming down, but because the 2-year from 2020 to this year, I've been looking at 2-year, Joe. It got up higher in October in 2021. If you look at the October 21 number for 2020 to 2021, it jumped. So if this number comes down, let's say it's 7.7 or 7.8, they can start claiming that they're on top of this thing. But if you look at the 2-year numbers, it's going to be in parity with the rest of the year for the last 2 years.
I'm going to say this when we get back from the other side of the break. What happens on, and it is Thursday, I did confirm, it is on Thursday. What happens if there is a low CPI print? This would be something where, Joey's just telling you about the need to act. If you think we're going to have a low CPI print on Thursday, you want to be in the gold and silver market before Thursday, if that's the case. We'll talk about that when we get back. Welcome back here, 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Monday. And Jason, on Thursday, we are going to get the next CPI report. Already, the Federal Reserve has let it be known that they plan, hopefully, to start slowing not the pace, but the amount of the rate hikes from 75 basis points to 50 basis points. But they said they put a caveat that, hey, by the way, those of you that are thinking that we're going to stop at 5%, we're going to have to go higher. But, Jason, to your point, there's people out there that think and Jason really said it perfectly. We got a big number falling off from last year. This is the time when they did maybe we should put transitory to bed, right? We need to bury transitory and actually admit that we have inflation. Right now, they expect the number month over month to be 0.6%. I mean, and that's a hot number. I mean, that's 7.2% annualized. This is the same number that we got last month as well. The consensus right now is 0.5 to 0.6 for the reading on Thursday. But to Jason's point, they actually anticipate the year-over-year number to fall a couple of basis points. Right now they're looking, and I think they're hoping for 7.9 on Thursday, Jason.
And they might get that. And I like your month-over-month number, Joe, because it was just several months ago that the New York Fed chief said June of next year it'll be 6.8. Well, that sure sounds like your 7.2 number, Joe. Sounds like this is kind of where they want it to be, this high 6s, low 7s. So if it comes in at 7.9 or even 7.8, which I think is possible, Joe, not because inflation's cooled off from the previous month, just because, look, the number got really big in October of last year, so you factor that in. Well, then it's not going to be quite as severe since things have kind of gotten to this level and it's kind of sat there. So, yeah, Joe, this is, if you're putting a fake story together about how inflation is going to cool off and, hey, we need to ready to not raise the rates quite as fast, I guess they'll get what they want out of it, Joe. But still, even if they raise it a half point, they're still raising it.
Yeah, and I'll say this. This is the way I look at that number. If we get a number below 8, I think you're going to see dollar softness, right? They're going to have people out there, right? They're going to do the cheerleader dance, all of that stuff to try to, look, it's finally starting to work. And I think we're going to get a softer dollar, which means normally that means, Jason, higher gold and silver prices. And remember, 1692, that's the next technical level for gold. We close above that. Then we got to start talking about 1740. Silver here sitting right at $21. For silver now, look at it this way. Every dollar, right? You close above 21. We want to see a close above 21 because that opens the door for 22. And we saw last week Silver's that little brother. We keep talking about it all the time, right? Gold's the responsible brother. Silver's the younger, little wild brother, right? And they got to be dinner's at 6. And dinner's getting ready. It's almost dinner time. Dinner's at 6 o'clock. They were at the playground. Gold said, we got to get home, otherwise we're going to get a whooping. Little brother wanted to stay. Gold said, okay, suit yourself. I'm going to start heading home. And Jason, just like that, in one day, here comes Silver running to catch up to Big Brother.
Yeah, and Silver, when it goes, it can go very quickly, up or down. So Joe, it should be $30 anyways. We know this. So at some point when it goes, it's going to go fast.
Yeah, and we'll have to see. So I don't know what the number. Obviously, Jason, we don't know what the number is going to be. But it's always great having two sets of eyes on this because Jason picked up on, hey, we got a big number from last year falling off. So you could get one of these reprieves that really isn't a reprieve. Hey, the number looked better, but hey, we had a big number fall off. And oh, by the way, the next number isn't nearly as big, and I expect it to go right back into the low 8s the next time around.
Yeah, that's right, Joe. And inflation's an interesting thing. The situation we're in, when we're getting into 2023, Joe, whatever games they're playing to try to make things seem better going into next year, we could get a double hit on inflation. We could see things heat back up and get really bad next year. So I think we're kind of in a lull for the next few months, possibly, and then let's just see what happens, Joe. Because I think there's a lot more money floating around out there that they're reporting. In 2008, when they did quantitative easing and they reported $5 trillion that they put into the economy to fix the banks, pay off the banks, and all that, they ended up printing $29 trillion, and they didn't even get the inflation because all that money went to fix banks. The money didn't go anywhere. To me, Joe, I'm convinced that there's a lot of money being passed around here. It's hard to believe. You got to go back to 2008, 2009, 2010. Literally, 3 of the top 5 investment banks, 2 of them went out, Bear Stearns and Lehman Brothers. They were on the cusp of the banks not loaning money to each other in a complete freeze. And Joe, I think we're already there now, and I think the only way you stop that is somebody's throwing some money at, hey, you tell one bank, we'll give you a little money, just don't tell anybody else. I think they're doing that to everybody that needs money right now. I think that's the only reason it hasn't collapsed in a really big way, Joe.
And we're going to watch all of this play out. I'll reiterate. We're not going to see any meaningful stop in interest rate hikes until the job losses arrive, and we're just not there yet. Yes, is Meta Facebook looks like they're gonna be the biggest one yet. It appears to be 87,000 people work there, so just laying off 10%, 8,700. I don't think 10%'s enough. The way things are looking at Meta Facebook, I was golfing at our men's club had a big event on Sunday yesterday. By the way, me and my partner, we took second. Yeah, I contributed almost nothing, but so what? We still finished second. But having said that, one of my good buddies, he works for a major financial company, and financial company in regards to they assist all the big Fortune 500 companies prepare their tax filings and their 10Ks and all the things they need for Wall Street reporting. I'll tell you what he had to say when we get back. 800-951-0592. Gold's up 5, 16.81. Silver's up 16, $20.95. And I know our website, Kitco, will have a little different price because gold rallied on Friday after the New York close. Yeah, so Kitco's got gold down $5 right now. They do have silver flat, well, silver up a cent, but it doesn't matter. The prices are what they are. And Jason, before the break, I was telling you about my buddy. He works for a major firm that helps all the publicly traded companies with their compliance. in all the forms and their 10K forms, tax forms, all the things that they need to do to be compliant, to be a publicly traded company. And he was telling me about how, because they've been on this huge hiring streak, that for the last 2+ years, he's like, we have hired thousands of people. He told me yesterday that he was told last week, not only are the layoffs going to start and start in earnest, but they're actually going to lay off more people than they've hired over the last 2 years, and really working on head count. And he was telling me all of his clients that he's working with these publicly traded companies. They haven't done them yet. We haven't seen the announcements yet, but that's what they're all talking about. They're talking about head count and how many people can we get rid of. And I think when the rates get high enough, Jason, that's what we'll see.
Well, and Joe, like I said, another reason it's going to be hard to get all the job losses that the Fed's looking for so that they can calm down on rate hikes is that coronavirus came through and the job market's sort of already kind of crashed and rebalanced. And I think there's a whole lot of businesses set in motion hey, we'll up your hours, cut your hours, up your hours, cut your hours, based on what we need you for, which is, the Walmart numbers you expressed a couple of weeks ago that their holiday hiring is going to be a lot less. Well, that's because the current crop of temporary employee or part-time employees probably just upped some of their hours, Joe, for whatever they need, right? So I don't think it's going to be very difficult to get those job losses they need because they kind of flushed that out just 2 years ago.
Here's an interesting one. We've been reporting this, and Jason and I have said this 1,000 times maybe this year. Inflation is a small business killer. It just is. And we're over the euphoric part of the inflation is over. Because you got to remember, the prices going up, that's a symptom of inflation. The euphoria of the inflation was all the money printing that happened in 2020 and 2021. And yep, we know somewhere, believe me, they're still doing it, but it's nowhere near the scale of there. But the latest numbers have come out about rents and who's paying and who's not when it comes to small business. And I'm going to give you two numbers. I'm going to give you the number for December of 2021 and then the number today. This would be an October number. In education, it was 23%. In other words, almost 1 in 4. And you think, well, what's education? These are going to be the daycares, the Montessori schools, the private schools, all of these types. Maybe you're in the homeschool business, these types of things. It was 23% were in delinquency for rents. It's now 57. Wow, that's huge. Mm-hmm. Automotive was 31. It's now 49%. Think about every small automotive company, 1 and 2 aren't paying the rent. Restaurants was 35%. It's up to 49%. Transportation was 33%. It's at 46%. Retail was at 25%. It's at 43%. I mean, you get the idea. Jason, small business after small business after small business, they're 40 and 50% delinquent. How about beauty salons? 24%, 39%. And again, this is a sign, right? What's the first sign? That's probably one of the first things small businesses do when they're out of money is, hey, listen, I got to pay payroll. Otherwise, no one will come to work. I'm gonna not pay the rent because at least the landlord's going to give me some time before he kicks me out.
And Joe, what you're actually talking about is lower standard of living because those businesses you named, like hair and education. Hey, I had my son in some sort of private education. Well, I'll just put him in public school. It's free. Hey, I can't afford to get my hair done like I did. My wife can't get her hair done. I'll just have her go to her friend who does the the best job she can for free to cut her hair. You're talking about businesses that when people have no money, these are the first places they're going to cut. So of course these guys aren't going to pay their rent because they have to jack their price up like everybody else for the inflation, and people just can't pay for it, Joe. So I like the businesses you chose to talk about, because these are the ones that hit first. The ones that, hey, if I can make a cut in my expenses, those are the ones that get cut first, Joe. And now they can't pay their rent.
And here's something else. If these layoffs that my buddy was telling me about are happening, if we're going to see this pickup, we had a bunch of announcements last week, but I said, hey, that's not enough. We need to see a lot more than that. If these things come to fruition, and you think about these small businesses, hey, they're barely hanging on, right? Hey, I'm a month behind, or I'm 60 days behind, and all of a sudden, just a small drop in activity because other people got laid off. All of a sudden, Jason, we've got a domino effect, and small businesses start shuttering at a pace a lot faster than people expect. That's what you got to be watching out for. We'll be back. Final segment coming up. 800-951-0592. Joe and Jason, final segment on this Monday. We have availability. I'm just going to say this. Availability is getting harder. We've been warning about this. We've done a really good job getting things in a timely fashion. And I'm just going to tell you, I'm going to warn you again. We'll go as fast as we can. Be patient, especially on the silver side of things. And certain types of gold are now becoming a little bit longer, a little bit harder to get. Fractional gold becoming a big challenge. 10th-ounce gold eagles, $5 liberties, $10 liberties. $10 liberties have been really hard to get. I've got 50. These are available, so I will have these here this week, but I only have 50 $10 pieces. They're $1,110 right now. So two 10s getting awfully close to a 20. And Jason, 10s have been a lot more expensive than 20s lately.
Yeah, yeah. That's just it's cool when you can get $10 liberties, Joe, because it's the half ounce, right? And since I've been here in 2018, we've done $10 liberties so many times. And you're right, Joe. Just recently, it's just been difficult. These are being picked up, and let's just face it. In 2018, I was on the air with Joe and with Brian. We were selling $20 liberties for $12.50. Now, what is it?
20 for $12.50. The 10s were like $6.25, yep. $6.35, something like that.
Now the 10s cost as much as the 20s, Joe. That's just the way it goes, right? So get them. If they any opportunity to get something fractional, and if you can get these 10s, it's a great time to jump on, Joe.
So we got a couple of things that I think. Of course, what they say when you assume something, right? But there's a couple of events this week that could be gold positive. I think the election on Tuesday, obviously Wednesday, if Wednesday they're able to call it and the Republicans have the House and the Senate, and we don't have to have, we got to get it tied up and counts and votes and who won, who didn't win. If we don't have that, I think that would be viewed positively by the market. And then this CPI print, this may be the only print between now and the end of the year that has an opportunity to be below 8.
Possible, Joe. It's possible. We'll see. I can't wait to see it because if it's in the 8s, that means December. I think it'll be in the 8s also. If it's in the 7s, I think it's possible. If it's 7-9 or 7-8, the December for November number could
that
also
we can hold there for December.
We can hold. I think the Fed has done a fine job of just leveling off inflation to a place they like it. And then we'll have to see next year with all the other, like I said, I swear it's what they're doing in the background.
But what happened to 2%? I thought that was the number they liked.
Somebody will bring it up. I know it's funny that these cowards that interview Jerome Powell, no one's asking that question.
Well, and again, because they know the answer, right? They're going to talk about how, this is what we want. we want to get the rates back down to that 2% level. But we already know that in 2021, the Fed secretly wanted inflation to be 4%.
Yep.
They didn't say that to publicly. They weren't on TV saying it, but we found out that's exactly what they wanted. The problem was it went to 4% and just kept on going. 800-951-0592.